Can you use the FHA 203k loan for an investment property? Well, it depends on your situation and your goals. Personally, I ended up using the 203k loan for my first property because I wanted to be a real estate investor. So I leveraged the 203k loan to make my first property a true investment. I'll tell you the 3 ways you can ensure that you make your first property a true real estate investment with the 203k loan in just a second. But before I get to that, the thing I want you to know if you're interested in this is the caveat to all of this was that this was my first property. I had not owned any real estate up until this point. The 203k loan is an owner-occupant loan. It requires you to put your personal name on this loan. It is a mortgage, a 30-year mortgage. It requires that the house that you purchase is going to be your primary residence for at least 12 months after the closing date. Now, if you currently own a home and you have zero intention on moving into this next property that you plan on buying with the 203k loan, this is probably not your vehicle. You cannot use the 203k loan to buy a rental property that you plan to never live in. Now, if you don't own a house yet, maybe you're currently living with family or you're currently renting or you have a different living situation and you just don't own any property, keep watching because I'm gonna show you those 3 tips on how you can use the 203k to make your property a true investment property. Number 1 is you're gonna use the 203k loan to buy a fixer-upper property to renovate and build equity and value into through the renovation, also known as the live-in flip strategy. The main benefit of the 203k loan is it allows you to buy fixer-upper properties or properties in bad condition that you typically wouldn't be able to buy with other mortgages. You can buy as-is properties or foreclosure properties that really need a ton of work, and what you can do is you could fix them up and build equity and build value into the property, similar to how a fix and flipper does it when they do that. Now that equity that you build is gonna be equity you're gonna be able to tap into with more loans, either using a home equity line of credit or doing a cash out refinance or something like that that's gonna enable you to pull that money out of the property to use and go invest in more real estate. The 203k loan only requires 3.5% of the purchase price plus the renovation cost that it's gonna take to renovate the property. Compared to other loans out there that require 20% or 30% down even for investment properties, this is such a low amount out of pocket. What you're aiming to do here is you're aiming to multiply and leverage your money to make more money on the back end. On my property, I only put $9,500 down for a $350,000 loan. The purchase price of the property was $270,000 and the renovation budget to renovate the property was $80,000. So all in, I was only in for $9,500 to purchase that effective $350,000 property. What was great was after I finished the renovation, the property was then worth $480,000. So I was able to basically turn my $9,500 into $130,000 of equity. Once I did that, I was able to pull out a home equity line of credit to tap that money and use that to go fund my next flip property that I did 6 months later. The second way you can use the 203k loan to buy an investment property is you make this a true investment by buying a multifamily property. The 203k loan allows you to purchase up to a 4-unit property. What this allows you to do is something called house hacking. House hacking is when you live in one unit of the property, but you rent out the other units or the other portions of the property to tenants and effectively get rid of your whole mortgage payment every month. Your tenants are going to be able to cover your mortgage, you're going to be able to live for free, and that's going to save you a ton of money. Housing costs are the #1 cost in everybody's finances, right? It's usually, depending on where you live, several $1,000s a month. If you could save that money and hold that money back, think of what you can do with that money, investing it in other places and making your money work for you to go buy more real estate. The first property I bought was actually a 2-family property. Once I finished the renovation on it, I lived in one unit and rented out the other unit. In my specific property, I was basically covering almost all of my mortgage. I was kicking in maybe another $200 or $300 a month. Very soon after, I moved in with my, at the time, girlfriend, now wife. We were planning our wedding. After a year later, after I closed, moved out and made that property a full rental property. I was renting out both units and essentially cash flowing $2,000 net per month. So I went into this property with the intention of moving out pretty soon because I knew this was just gonna be a stepping stone and not my forever home. And really what it did was turn into a true investment multifamily property. The third way that you can use the 203k loan to make your first property an investment property is tapping that equity, tapping that cash flow, and really most importantly, your experience to go use that to buy more deals. You're basically using it as a springboard to go further into the real estate game with all this new capital, cash flow, and experience from going through the project. Once you complete your 203k, so many doors will open for you. They totally did for me. Trying for years and years, trying to get into real estate investing, nobody wanted to work with me because I was a complete noob and I had no idea what I was doing. So what the 203k loan allowed me to do was get into a property for very little risk, very little out of pocket, which even I can afford, only $9,500. But I was still able to get all the benefits of real estate investing, becoming a landlord through the house hacking concept, creating equity and doing a flip, building the experience on how to find good deals and find something that was actually gonna make me the money I was looking for. The equity that you build is ultimately gonna be way more than what you put in as a down payment. Even if you only make 10% equity, you're essentially tripling your money, which is a great way to get started in the game if you're low on funds. Ultimately, you're using the 203k loan property as a stepping stone property to get into more investments. You're making this one a true investment for you and using all the benefits from it to continue investing. Also, the fact that it's an owner-occupant loan is great for you. As a newbie or someone just getting into it, take advantage of this. Take advantage of the low down payment the bank gives you, the low interest rate that the bank gives you, and all the benefits they give you and giving you all the money you need for the renovation. Take advantage of that because that's stuff that you don't get on the open investor market. When you look at things like hard money loans or other bank or investor loans, they're usually, instead of putting 3% down, they're looking for 30% down. They're also hitting you with much higher interest rates than what you would get on an FHA 203k. FHA interest rates are usually the lowest out of all the mortgages out there. But the most important thing and what you're really getting out of this is the experience. When I did this, I didn't realize how many doors would be open for me because all of a sudden now I had experience on how to find a good deal, how to renovate a house, how to find tenants and be a landlord, how to use and tap the equity to go use that to go buy more deals. It got me very savvy and developed a bunch of skill sets that helped me so much better on the next deal. These are skill sets that I wanted to try to learn for years, but the problem is that the best way to learn real estate is by doing real estate. And it was really hard to study it, but the 203k was doing basically real estate investing with training wheels on. You being able to showcase this deal to lenders and banks and real estate agents is gonna give you more credibility as well. It's actually gonna have more deals come your way, more lending opportunities come your way, and all it really takes is this one deal. Trust me on this, I didn't believe it, but doing that first one really does open up so many doors for you. I have one last tip I wanna share for you on this video, but if you've gotten any value from this, I'd really appreciate it if you can go ahead and like this video or comment below your favorite part of it, or in the very least, share it to someone that you think will benefit. That way, YouTube does its thing and shows it to more people and hopefully can help more people. Now, my last tip is to not make the same mistake that I did. Here's the thing. Banks will lend you the most money on the property that you live in and occupy. During the big 2008 mortgage crisis, the problem was people were buying way too many homes because it was just way too easy to get a mortgage. You had unsavvy real estate investors just buying properties on properties on properties because they thought that the value was just going to go through the roof and they were going to be able to cover it from all the equity they were building. As we all know, that didn't happen. And when the market crashed, all of these unsavvy investors had all these properties that they no longer were paying the mortgage on. All of these properties except one property that they were paying the mortgage on and continued to pay the mortgage on. And which property was that one? Yeah, you guessed it. It was the one that they were living in. So banks understood this, and now banks going forward, they only give the best terms to people that are living in the property because they know that of all the properties you may have, the one that you live in is the most secure. That's the one that you're going to continue to make payments on, even if the world's falling around you, because you don't want to be put out to the street and lose your whole livelihood and lose all the stuff you invested in, lose a place to live for you and your family. Now, the mistake I made was this. I tried getting a home equity line of credit after I had already moved out of the property. I thought because it was still under my name, I'd be able to get around it, but even though it was still under my name, on my tax returns and my ID, it saw my new living residence. and no bank was willing to lend to me, or no bank was willing to believe that I was still living there. And that's fine because I wasn't. I eventually found a bank to do it, but I didn't get nearly as good a terms as I would have if I was still living in the property. I got a second home loan term, which meant a much less loan to value, so I was able to take out a lot less money than I would have been if I was still living in the property. So the big tip is, if you're gonna do a home equity line of credit or a cash out refinance, make sure to do it while that property is still your primary residence on paper and all your documentation, and that you're actually still living there, because that's how you're gonna be able to pull and extract as much money out of the property as possible, again, to make it a true investment to go buy more real estate. The 203k loan isn't meant for investing. It's not meant for investors, and it's not an investor loan. It's a personal mortgage that's taken out for you for your primary residence. You can't buy this under an LLC, and honestly, that's a good thing. That's the reason why you get such great rates and great terms. However, you can totally use the 203k loan and all the benefits of it to your advantage to make your 203k property a true investment for you, especially if you're looking to get into real estate investing long term. If you want to learn more on exactly how to replicate the process I did to turn my $9,500 down payment into $130,000+ in equity with the 203k loan, go ahead and subscribe to my channel. I have a ton of other videos talking about this whole process. Also, be sure to join my free Facebook group at the link in the description. I do free trainings every week, really covering all the things I wish I knew when I went through my first 203k. It's to help more people take advantage of this process, so again, they could build equity, create cash flow, and really make their first house in their investing journey a super profitable one that's going to be a jump start for the rest of their deals. I'm Matt Percaro, and I hope I see you on the next one. Till then, go out there, build some equity, and leave me any questions you have in the comments. I'm happy to answer any of them. I want to help, and I want you to take advantage of this loan just like I did. Peace out.